Michelle, weigh in on this. What do you think about all of it?
Yeah. So I think it's interesting. I completely agree with what Steve is saying. Clearly, if inflation doesn't continue to move lower, the Fed isn't going to cut. They've got a 2% target. There's always talk about, is there tolerance to increase? Would they be comfortable if it was only, 2.3 or 2.5? The bottom line is that they've consistently said they need to get to that 2% target. If they are not making progress, then I think they're going to be hesitant to cut, even taking into account that you need to cut before you get to the target. So I think we've moved to a point now where the Fed is actually going to be basing decisions more on actual progress toward inflation than just forecast progress toward inflation, given the fact that these last couple of numbers have surprised everyone, including ourselves, by being firmer than expected.
Would you be shocked if there were one or no rate cuts this year?
Well, I would be, because we have a forecast that does have the inflation rate coming down, hitting 2% by the end of the year. We also have an economy that is weakening as you move through 2024. We actually have some negative GDP expectations by the end of the year. So in that scenario, we would have the Fed cutting. So what you're really saying is, would I be surprised if inflation made no further progress, or the economy showed such continued, even upward momentum, that the Fed didn't end up cutting this year or ended up cutting very little? That would be surprising to me. But I'll be the first to admit these higher inflation prints early in the year, which is not uncommon, that has happened. And often what we've seen then is lower numbers in the spring. But the higher inflation numbers and this ongoing resilience of the economy, has taken us by surprise.
Hey, Michelle, I wonder if you could help us read what we're going to see at 8:30. My take has been, I've been surprised at the number of Fed officials talking about the immigration numbers. The CBO came out with that report and said there's a lot more foreign-born workers in the country than we thought, or foreign-born people than we had previously estimated. What I hear the Fed saying when they talk about these immigration numbers is they're less concerned with big upside surprises or big numbers on the payroll side. And so the focus needs to be on on wages to understand how that's going to influence their view of the outlook for inflation.
Yep, I think that's exactly right. If you have faster labor force growth, then you can have stronger employment numbers, stronger payroll gains without the unemployment rate doesn't go up, without the labor market getting tighter. And so I think that's what, go ahead.
Yeah, no, I was just going to say, help me out with one thing here, which is you would think if these were, for example, immigrants into the country who have, for example, just came in or perhaps even came in illegally or some other means rather than a visa to work, that would put downward pressure on wages. Have you thought about that at all?
Well, that's exactly what you would expect. I mean, again, it's the balance between supply and demand, and what we're continuing to see in the payroll numbers is healthier demand as well, and that's what's keeping the unemployment rate steady. And also the wage numbers do tend to act with a bit of a lag. So the question is, are we getting so much immigration that it's exceeding demand, so that supply is exceeding the demand for labor? That would put downward pressure on wages. That doesn't seem to be happening yet, again, because it doesn't seem as if the companies have pulled back so much on demand. The economy doesn't seem to have slowed so much that the demand for labor is actually being, overcome by the amount of supply. So wages have not really, they're moving lower. We think this morning's year-over-year print is going to be probably the lowest since, the summer of 2021. Wow. We have a 3/10 gain in hourly earnings.
They're not moving lower. I mean, a 3/10 gain in average hourly earnings on a month over month, if you're looking year over year, 4.1%, that is not moving lower. And I think this is the point that people have to get back into. It may be lower increases than we're used to seeing, but it's still increases. I mean, what does that mean for inflation?
Well, they always go
up. And that's it.
Right.
That's it. Well, they go up, and it is trending down. As I said, that 4.1 would be almost a 3-year, a little bit less than a 3-year low. But 4.1, is that consistent with the 2% inflation target? And that's probably what the Fed is looking at. I would say no.
If you're doing 2% productivity and you have 3% inflation, and you're only getting wage gains of 4%, the wages aren't driving inflation at all.
So 4.1%.
4.1. I don't think
would be a neutral.
The trouble with this discussion, Becky, is let's pick a productivity number and argue over it, right? Which is I don't know what that number is, and we're thinking a lot about what the right underlying number is productivity. But for example,
so it's not just neutral rates. You got to figure out neutral wage inflation.
Wage inflation plus productivity would give you the number that would be whether or not wages are driving inflation. So long as the sum of inflation and productivity is greater than the wage gains, it's not inflationary.
Okay.
And Steve, you make a really good point just quick on productivity. I mean, that's the other story here.
Yeah.
I think the Fed does see a better productivity outlook.
Michelle, very quickly, if wage inflation is a little hotter, if it's 0.4% month over month, would that concern you? Or is 0.1% not a big deal here?
I'm not so concerned about the wage numbers being a tenth or two off. Really what's going to happen is next week's CPI numbers is really going to be front and center. The wage numbers today, if they're hotter, will put even more attention on how the CPI numbers look next week, which is, to be honest, I think even what people are waiting for more than even this morning's jobs report.